Okay, is the audio, am I audible guys now? Am I audible guys? Ridya, Neha, Soreen, Navya, Badari, am I audible? Just give me a heads up. Am I audible guys? Am I audible? I'm extremely sorry for that. Okay. I'll just repeat the explanation once again. I'll just repeat it, okay, for everyone. So understand there are two types of taxes, my dear friends. Yeah, I'm repeating, don't worry. There are two types of taxes. One is direct tax and the other is indirect tax. Right? Understand the concept of taxable event first. Okay, before understanding anything, let's focus on taxable event. So when I talk about taxable event, understand every tax law will define a taxable event, and if you trigger that taxable event, you will be captured under that law, you will be captured under that act, and according to that act you are supposed to now pay the tax of that act. Okay, so when it comes to GST, the taxable event is supply. The taxable event is supply. Keep writing guys. Okay, keep commenting in the comment section so that you are also active, and accordingly I can also understand that you are getting some understanding. Okay, so the taxable event is, okay, supply of goods or service. Okay, there is a particular section 7, where we will learn what is supply. A chapter is dedicated to it. I'm sure you have done that in InterCA. Okay, but there are a lot of things today that we are going to do which you have not done in InterCA, right? So that's it. So when I talk about, my dear friends, the taxable event, when it comes to GST, it is supply. So for example, if you go to PVR, right, and you're watching a movie, you will have to purchase the ticket. Yes. So PVR is giving you, okay, exhibition of cinematographic film service, and you are giving them the ticket price, that is, let's say 200 rupees, correct? They are giving you service, you are giving them 200 rupees as the consideration. Perfect. Understand. You might be saying, sir, actually in this case I am paying GST. No, you are not paying GST, you are the consumer of service. Okay, if you really want to know who will pay GST, then you need to ask the right question, and the right question is, who will pay GST to government? Who will pay GST to government? And that is the person who triggers the taxable event of that tax law. So who is doing the crime here of supplying service? PVR. So who will pay tax? PVR. Is that very clear, my dear friends? Are you able to understand, guys? Yes. Okay, perfect. So I hope, my dear friends, this is very clear, that in case of, my dear friends, indirect tax, the levy will always be on the supplier, but the person who actually bears the burden of tax is the recipient, right? And the reason that happens is because supplier is easily able to shift the burden to the recipient. Very clear. Okay, so my question here comes, if tomorrow government, okay, let's say for example, if supplier tomorrow forgets to shift the burden to the recipient, let's say he feels that his service is exempt, so he does not charge any GST to the recipient, but in actual it is a taxable service. Can tomorrow, when the government sends him a notice that please pay us tax of 60 lakh rupees, can the supplier tell to the government that, listen boss, I have not charged GST to the recipient, so I have not collected, so I will not pay. Sorry, please, sir. And so you also don't ask because I have not taken from the recipient. Will that happen? No, that will not happen, guys. That will absolutely not happen. Okay, perfect. It is the supplier, my dear friends, okay, who will have to pay it from his own pocket, right? Because in this case he was not able to shift the burden. So in maximum cases he can and he will, and the recipient will willingly bear it because he has no other chance. But right, in case he is not able to shift the burden, he will have to bear on its own. So indirect taxes, that it has a feature. The tax which are listed under IDT have the feature of shifting the burden. Got it? But my dear friends, direct tax does not have that feature. Here it's the supplier. Let's say PVR is making money by selling tickets. Okay, it's focus on the PNL. There is sales. You reduce the expenses. Whatever net profit comes, it is subject to income tax, right? And who pays that income tax? It is PVR itself, right? So here, for example, PVR is the supplier. Okay, let's say the movie buff is the recipient. Here, who is the supplier, my dear friends? Absolutely correct. It is PVR who will pay the tax, and person who will boom is also the PVR. Is that very clear, my dear friends? I hope this is very clear. Okay. So my question comes to you. For example, if there is a transaction something like this which pans out, okay, I am Karan sir and I am giving service to students. Which service? Coaching service. Okay, let's say after 1 year, okay, since you've liked my revision lectures already, you will recommend it to your juniors. Okay, and I am making 10 crores. Yes, choti baat karni nahi beta. Never do small talk. Always dream big, start small. Dream big, start small. Okay, so 10 crore rupees I have earned through coaching service. Okay, now you tell me in this case. Okay, understand that I have no expenses at all. Okay, I have no expenses whatsoever. Okay, just focus on the income. I have income of 10 crore rupees. Okay, which I have got it obviously from the students. Right, now you tell me. Okay, let's say income tax rate is 30%, GST rate is 18%. Okay, just in general, you tell me what will happen now. Mr. Karan, okay, will pay income tax or GST or both? Arshdeep, I think now it will be more clear. Just check. Tell me what will happen. Come on, guys. Come on. Manish Saini, बताइए. Tell me what will happen in this case. Yes. Zoom की audience आप भी यहाँ participate करिए. You all can also participate. Is it income tax? It is GST, or is it both? Tell me. Absolutely correct, friends. It is both. And I'll tell you why. Because Mr. Karan first triggers the taxable event of supplying service. So GST shall apply. And how will it apply? Very simple. Karan sir will charge GST 18%. That is 1.8 crores to the students. The students will hand it over 11.80 crores to the supplier, that is Karan, right? And उसमें से Karan sir क्या करेंगे? Tell me what will Karan sir do? 1.8 crores GST will go to government, and he will keep with himself how much? 10 crores. And let's say 10 crore is the net sales, there is no expenses, then it is on this 10 crores that he will actually end up paying income tax. Are you getting it? Did you get it, Manish? Yeah, absolutely. Okay, so supplier, it's Mr. Karan who will pay income tax and GST both, because he actually lands up triggering the taxable event under both tax laws. Is that very clear? Yes, I hope, my dear friends, this is very clear. In GST, it is triggering the taxable event of supplying goods or service. In income tax, it's triggering the taxable event of earning income and previous year, which will be assessed in the assessment year. That's it, my dear friends. This is the only clarity you require from the perspective of direct tax and indirect tax. Is that very clear, my dear friends? Yes, sir. Okay, moving ahead to the next concept, my dear friends. moving ahead to the next concept. Okay, now understand, my dear friends, that tax is supposed to be given to the government, right? Now, when we recently, celebrated 77th Independence Day 1947, what happened was, when India became independent, we wanted to be a Republic India, and which is why we came up with the concept of Constitution as the governing document that governs each and every citizen of India, right? And in that, finally we came up with this article called Article 246, Schedule 7, that came up with 3 lists: list 1, list 2, list 3, list 1 CG, list 2 SG, list 3 CG and SG both. Okay, so these are all the, understand, in list 1 there was matters concerning CG. So all the taxes which are supposed to be given to CG, which are supposed to be given to CG, understand, my dear friends, were written there. Excise, income tax, custom, service tax. You can also add CST to that, right? You can also add CST to that list. CST, Chhatrapati Shivaji Terminus, no baba. Central sales tax. Central sales tax. Yes, state list. That is list 2. All the taxes which are given to the state government: VAT, lottery tax, luxury tax, entertainment tax, to name a few, right? And list 3, most important discussion. List 3 never had any taxes with it, so there was no tax head covered under list 3. Got it? So there were forest laws, there were divorce laws, there were family laws, but there was no tax law that was visible in list 3. So from here we conclude a very simple thing. That either all the taxes were going to CG, or either all the taxes were going to CG. Either all the taxes were going to SG, or either all the taxes were going to CG. Got it? So there was an exclusivity. या पूरा CG या पूरा SG, पूरा CG पूरा SG. Got it? Yes. So it was never something like that there is sharing of taxes. No, it was never like, for example, it was never like the service tax, some part of it is going to CG, some part of it is going to SG. No, it will only and only go to CG, right? For example, VAT will only and only go to SG, something like that, right? So there was no concept of sharing of taxes. Right? Understand, this is a very big conclusion we are taking from Article 246, that there was absolutely no sharing of taxes. And why was that absent? Because list 3, which talks about matters concerning CG and SG, did not have a tax head. Is that very clear, Manish? Is that very clear, Adya, Akila, Chauhan, Malik, Bandari, Rajvi? I hope you all are following up. Yeah. Okay. Now, I am stopping that discussion there and there itself. And I'm coming back to the roadmap of GST. In 2000, Atal Bihari Vajpayee thought it's time to create something called as GST, where there is one nation, one tax. Right? 2004, a committee was set up. 2006-7, Chidambaram said that 1/4/10 we will go ahead and implement GST, but somehow it couldn't happen. 2014 finally came the NDA government, National Democratic Alliance, right? Party with 24 odd people. They said, let's do it. So the very first year itself, they came up with 122nd Constitution Amendment Bill, which later became 101st Constitution Amendment Act. So पहले था bill, then it became act. Bill, act, 122nd, act 101st. Now you must be thinking why. Obviously because the remaining 21 bills which were before GST, which were before Constitution Amendment Bill, were still in discussion. And before that only GST bill got passed, Constitution Amendment Bill for GST, obviously it got passed and it was enacted, right? Now the first question is, why to amend the Constitution? Why? Why Neha? Why Sorin? Why Vasu? Why Rajvi? Why Ridhya? Why to amend the constitution Chauhan Malik? Why? We could have just kept it the way it is, and we could have rather just proposed, right, the GST law, and then we would have made it into GST Act, right? We could have rather just introduced GST bill, and then we would have enacted the GST law or GST Act, whatever the case may be. Why was there a need of constitution amendment? Why was the constitution being amended? Very, very, very simple, my dear friends. It was necessary to amend constitution because if you understand, if you realize, my dear friends, that whenever we charge GST, okay, its selling price, let's say 1000 rupees, plus there is CGST and there is SGST, correct? CGST Central Goods and Service Tax, SGST State Goods and Service Tax, right? So let's say, for example, if it's 9%, it's 90, correct, 1180. I'm sure you are very well aware of this, that this part goes to central government and this part goes to state government, correct? Understand one thing, my dear friends, it was necessary because in GST there is division of taxes. Some will go to CEG, some will go to SG, some will go to CEG, some will go to SG, correct. But understand that Article 246 does not allow that. We just concluded that there is no sharing of taxes possible. But on the other hand, we on day-to-day basis are always seeing that GST is levied by the way of CGST and SGST, where some part does go to CG, some part does go to SG. So on one hand, right now we actually have a law where there is sharing of taxes, but on the other hand, the constitution clearly states that we do not allow because such tax head is absent in list 3. Then how is this possible? How is this even possible on earth, my dear friends? Only because of one amendment, and that is the constitutional amendment, my dear friends, that we did because of Constitution Amendment Bill, because of Constitution 101st Amendment Act 2016. Okay, it was because of this, and it was only because of this, my dear friends, okay, that we finally, my dear friends, thought of amending the constitution and bringing 3 articles: Article 246A, 269 and 279. 246A, 269 and 279, right? Where specifically I would right now talk about 246A, which categorically stated it starts only, if you refer the Bare Act, it starts with only notwithstanding anything on Article 246. Notwithstanding anything in Article 246, CG and SG will have the power to levy and collect goods and service tax. Simple. So now CG and SG have the power to levy and collect goods and service tax on supply of goods and service. Simple. So now if there is any taxable event of supply of goods or service, the GST tax that is levied will be levied by both CG and SG, and that is passed by Article 246A, which overrides Article 246. It is passed by Article 246A, which is clearly overriding Article 246. Okay, so which has higher value? Article 246A. Remember this. Okay, perfect. Right now we will come to Article 269A. We will come to Article 279A. But before that, I would just like to quickly take you through how GST is levied. Simple. There are 2 types of supplies, my dear friends. One is intrastate, one is interstate, one is intra, one is inter. We will definitely do this in detail when we go to IGST, but right now, very simple things. Very simple things, guys. Okay, and since you are already in final CA, okay, I will introduce you to the concept of, okay, location of supplier and place of supply. Yes. Location of supplier is also defined, place of supply is also defined, right? Location of supplier, the place where the person who has committed the crime of doing supply is located. Place of supply, is basically the place of crime itself, the crime of supplying goods or service. So always remember, you will for now check these two elements only. You are absolutely not concerned with location of recipient. Got it? You are only concerned with what? Location of supplier and place of supply. Location of supplier and place of supply. You have absolutely nothing to do with location of recipient, right? So always check these two, right? And if simple, okay, if these two are within the same state or union territory, simple, it is intra. And if it is simple, it is between two different states, union territories, and one state and one union territory, in that case it will be inter. Okay, so I hope you are very clear with it, that when is it intra, when is it inter, when is it intra, when is it inter. Does that make sense, my dear friends? Does that make sense, my dear friends? Absolutely correct. Okay, now understand one thing, my dear friends, that you've understood what is intra, what is inter, and you also understood that okay, the two parameters that you need to check is LOS and POS. LOS and POS. There are two things that you really need to know, understand. Okay, understand that okay, when the transaction okay happens okay between two states, sorry, within the same state. For example, supplier is, let's say, in Maharashtra, recipient is also in Maharashtra, okay, and the place of supply is also in Maharashtra, everything is in Maharashtra. What will happen? Very simple, selling price plus CGST and SGST, right? So if the LOS and POS is within the same state, CGST and SGST, okay. But if the same case, okay, if it's in two different union territories, let's say Chandigarh, right, then in that case what will you levy? CGST and UTGST, CGST and UTGST, Union Territory Goods and Service Tax, correct? Okay, now the third part, very simple. When it comes to union territories, okay, you need to know this very clearly. Which ones are the union territories that you know? One is Chandigarh, second is Diu Daman, third is Dadra Nagar Haveli, okay, then you have Lakshadweep, then you have Andaman Nicobar, then you have Delhi, sorry, then you have Ladakh, then you have Delhi, then you have Puducherry, and then you have J&K, correct? So these are the union territories of India. These are the union territories of India. But okay, point to be noted. Okay, when it comes to this, understand one thing. They are now one union territory. They used to be different, but for all administrative purpose, they are now combined ones, because it hardly is like, understand, okay, both are just besides each other, and you know, to recruit, understand that government did not have the budget to recruit two different IAS officers, IPS officer, IS officers for two different union territories. So they have mixed it and clubbed it into one. This is one union territory now, okay. So understand that if there is any transaction between Diu Daman and Dadra Nagar Haveli, it will be intra, and there will be CGST and UTGST. Is the audio low, guys? Is the audio low, guys? Is the audio low? Guys, I want you to answer, please. Is the audio low, guys? कि proper है ना? People who are watching on the YouTube, Please, Rajvi, Chauhan, Malik, Soreen. Are you not able to hear me clearly, guys? Just a second. YouTube Janta, please tell me. YouTube Janta, is it fine now? Is it all okay now? Just fine क्या होता है यार? Say it's fantastic. Say it's damn good. Okay, fantastic. Okay, let me go ahead. Let me move further. Okay, Diu, Daman and Dadra Nagar Haveli, they are considered, my dear friends, as one union territory. So if there is any transaction between them, initially it was inter, but now it will be intra. Okay, because it will be considered within the same union territory. Is that very clear? Okay guys. Damn good. Chalo. Next my dear friends, when it comes to the last three ones, understand they are union territories but they have statehood. Yes. So if you will realize that all the states have chief ministers, yes. In our case, okay, Maharashtra, it is amazing. We have one chief minister, two deputy chief ministers, right? Chief minister, Shiv Sena, deputy, BJP and NCP. So clearly, there is no opposition because everyone is in government, correct? Except Congress, everyone is in government. Got it? Yes. Okay, can you hear me guys? Is it all good? Yeah, fantastic. Parth, can you hear me? Can you see me? Okay, take it. Okay, done. Okay, so they have partial statehood, and because of the fact that they have partial statehood, my dear friends, concept is very clear. In GST, you consider them as states only. Got it? For them, for you, in GST they are all SGs. So if, let's say, okay, location of supplier Delhi, place of supply Delhi, CGST and SGST. Puducherry, CGST, SGST. JNK, CGST, SGST. Got it? But what are you going to track? Two things: location of supplier, place of supply. Very simple. Okay, so just for my acquaintance, my knowledge, okay, start the answers, start giving out answers. सबसे पहला LOS महाराष्ट्र, POS गुजरात, LOR गुजरात. नेचर ऑफ सप्लाई इंटर और इंटर फटाफट से. यूट्यूब इंटर. टैक्स IGST. Simple. Diu Daman, Dadra Nagar Haveli. Correct. Intra, CGST, UTGST आएगा या SGST आएगा? It will be UTGST. Correct. Puducherry. Okay. Puducherry. Simple. It is intra and it will be CGST and SGST because it is Puducherry. Puducherry has partial statehood. JNK Ladakh, understand, JNK is a state and Ladakh is a union territory in the eyes of GST. So it is clearly between one state and one union territory, inter IGST. Chandigarh. Okay, it is intra, it is CGST plus UTGST. Delhi, Mumbai, it is again inter and it is CGST. Oh, I'm so sorry, IGST. Okay, that's it, guys. That's it. I hope this concept is extremely clear to you. Give me a heads up. Say, I got it. Come on, give me a high five. Give me a high five. Interact with me. Say, I got that. I got that, sir. Okay, I got that. Okay, fantastic. So that is done. Okay, absolutely correct. That is done, and we are done and dusted with all of that, right? So before I go ahead, okay, there is a question that can be asked in your exam. Why was the need to amend constitution? So I've broken down the entire question ka answer into very, in a very chart form type answer, because it's a very important question. It's already previously asked in the exam. It can be asked, especially in your last question number 6 or question number 7. They always ask such theory kind of questions, right? Why was there a need to amend constitution? Very simple. The need to amend the constitution was because center and states, understand, center and states, the power were delineated, the power were divided. Either exclusively, okay, the tax would go to center, or either exclusively the tax would go to state. So all they have done is mention those taxes which are going to centers and mention those taxes which are going to state. For example, central excise duty, central government. Okay, CST. Now understand one thing. We will come to this. We will come to this mostly today itself. That center in CST, center used to levy. So the power to levy was with center, but power to collect was with state, right? We will discuss on this later. Okay, just give me half an hour and we will come back to this. Okay, but understand that this is how it worked out, that the levy power was with the center, but the power to collect was with the states. Service tax, both levy and collection power was with center, and import of goods also, understand that BCDI GST was obviously with the center. Now it was very important, my dear friends, okay, that the introduction of GST, okay, rather I would just ask you all to center levy basic customs duty, that's it, just levy, don't add IGST to that, because we are talking about taxes which were before GST, right? So now understand that first they've said that, okay, before the amendment, center and states, the powers to levy taxes were respectively, right, and they have then mentioned the taxes. Then they have come up with something, that introduction of GST required amendment in constitution so as to enable the integration of all the above taxes. Now understand, okay, understand that it's very important for you to understand that all the central taxes and state taxes are getting subsumed in GST, are getting subsumed in GST, subsumed in GST. Got it? So it's very important for you to understand, my dear friends, that tomorrow when GST is levied, it follows the concept of dual GST model, where some part has to go to CG, some part has to go to SG. Why? Because while you are making that tax, you have taken the power from both of them. So when you are taking the exclusivity of levying a tax from both of them, tomorrow when you are actually applying that tax, you also have to share it between both of them. And the percentage sharing that came into picture was 50-50, 50-50. Got that? Got that, my dear friends? Yes. Okay. So that's it. That's it. This is all I want to tell. Okay. So it is because of this reason that in GST we had to put in sharing of taxes. Otherwise, understand that how will someone agree to lose their power if they are not gaining ahead, right? So to enable the integration of all the taxes, we had to levy GST in such a way that it is levied in dual GST model. And to do that, we had to make sure that we put up a constitutional amendment, and which is why Article 246A came up, that clearly has overridden Article 246. That has clearly overridden Article 246. That's it. That's a simple way in which you can remember this answer, and I hope this effort helps. Okay, perfect. Next, my dear friends, taxes subsumed in GST, taxes not subsumed in GST. Quickly, we'll just go through central taxes: excise, service tax, CST, CVD, special CVD. CVD, special CVD, okay, I'll just take you through it quickly. Understand one thing, my dear friends, when it comes to customs law is a law only applied to goods, especially to import of goods. Like there's hardly any mention of export, understand, right? So it is a goods law, it is not a goods and service law, it's only a goods law. So import of goods, customs law, right? Now let's understand pre-GST and post-GST, what happened? Very simple. In case of pre-GST law, understand, first, since I have done the crime of importing goods, since I'm an importer, right? I've imported goods from US to India. Since I've done the crime of importing goods, understand, the first tax that will be levied to me was BCD, basic custom duty, basic custom duty. Now what happened? Understand, right? Let's say, for example, I am the consumer, I want to buy goods, right? I have two options. Either I purchase it from the domestic manufacturer, or either I purchase it from the manufacturer who's sitting in China, right? Now what happened was the domestic manufacturer, my dear friend, said that the selling price here is 100 rupees plus excise duty 10%, 10 rupees, 110. And the same costing when I asked from a Chinese person, he said that for you selling price is 90 rupees, and in your country, since you are doing a crime of importation, 10 rupees BCD will be charged. So for you, the net cost will come out to be 100 rupees. I said, okay, if I bring it from China, that's actually 100. And if I bring it from nearby manufacturer who is in India, it is 110. So while purchasing goods in my country, I am actually end up paying more amount. It's 110 here vis-a-vis. As an importer, if I go, I am already paying 100 rupees. So why should I purchase from domestic manufacturer? So here what happened is that demand started shifting to international markets, because there was no excise duty levied on whom? On an importer. And same thing happened with the importer, that there were no local taxes, there were no national taxes. He was only subject to BCD, right? So manufacturer said, "अरे excise नहीं लग रहा है यहाँ पे." A trader said, "Why is VAT not being levied to him? Why is VAT and excise both not levied to an importer, right? Why am I only suffering that?" And because of that, understand, my goods are becoming expensive. It was because of excise that his goods are becoming expensive, because he is supposed to shift that burden. Now please do something, government, because the situation is something like this. Because there it is 110, here it is 100. My goods are becoming expensive because of excise duty, manufacturer says. My goods are becoming expensive because of VAT, domestic trader says. An importer is happy in his life importing goods, because the only thing that he's supposed to pay is excise. BCD, basic customs duty. So government said, now listen, there are only two ways where I can bring this situation at par. Either I can exempt the excise duty, Okay, either I can exempt, understand. So the situation is something like this, correct? The situation is something like this. So either I can exempt excise duty and bring this 110 to 100, right? Or either I can increase the price of this 100 to 110 by levying excise duty. And that's what they exactly did, right? After the traders and the manufacturers lobbied government and complained about why are these taxes not charged to the importer, government said lagao is pe bhi, levy these taxes to these people, god damn it, make these goods expensive because if this importer, now understand, the demand is going outside India instead of staying in India. So make it expensive, and that's what they did, and which is why pre-GST law, now there was BCD, there was CVD, and then there was special CVD. CVD is countervailing duty. Countervailing ka English meaning is compensatory. So this compensated the effect of excise duty, this compensated the effect of VAT. So in pre-GST law, if an importer wants to import goods, he will import it, but before he takes it, out for home consumption, he will have to give three things: BCD, CVD, special CVD. Come again: BCD, CVD, special CVD. Only then the proper officer will issue order for clearance for home consumption and let him clear goods from the factory, from the customs port to the factory, right? But post GST law, my dear friends, understand. Okay, BCD was as it is, but understand, why were these duties levied? To replace what? To replace excise and VAT. To replace excise and VAT. To replace excise and VAT. Tell me, after implementation of GST, do they exist anymore? Does excise or VAT exist anymore? No, they have got subsumed in GST. They have got subsumed in GST, and which is why, my dear friends, they no more exist. So how can a tax which is compensating the effect of some other tax, right, that only does not exist, then what is the use of CVD and special CVD? If excise and VAT only don't exist, why will CVD and special CVD exist? Because they were just replicating CVD, excise and VAT. And now since excise and VAT don't exist, there is no question that special CVD and CVD also should not exist, and which is why they have also got subsumed in GST, and उनको replace करने आ गया है, my dear friends, IGST. So it is IGST that has clearly replaced CVD and special CVD. Acha, why IGST? Am I saying this? No. Okay, there is an article difference. Article 269A, which clearly says that import of goods or service is deemed to be interstate supply. And if it is interstate supply, simple, it is IGST. IGST. Did you get it, Saurabh Arora? Saurabh Arora, did you get it? Saurabh, I would just ask you to increase the volume of at your end, buddy, because I feel volume is pretty fine. Am I audible, Rajvi, Manish, Sorry, Parth, Chauhan? Guys, am I audible? Am I audible, guys? Okay. Yeah. Okay. People from the Zoom, are you able to understand? Are you able to understand things? Okay. Okay. Hello. Yeah. audio is low. I'm trying my best. I don't know, beta. I'm trying my best to make sure that the audio is good enough, because generally there is no issue as such here. I don't know why is it making an issue right now. But are you all able to hear me? Akila, Neha, Manish, Hiroshikesh, all good? Okay, all good, all good, all good. Okay. Yes, okay. So it is Article 269A, which clearly states, my dear friends, that import of goods or service is deemed to be interstate supply, right? So if tomorrow, let's say in Vivas I ask you, that, okay, Parth, tell me, if today you want to import something, which are the taxes that you will pay to the custom officer? Okay, just right now, what will you say? BCD and IGST. But what about pre-GST law? It was BCD, CVD, special CVD. I hope this is very clear, guys. State taxes: VAT, lottery tax, entertainment tax, luxury entry, and tax on entertainment advertisement. Right? Remember these. Okay. Just one thing: entertainment tax. Understand, my dear friends, with respect to entertainment tax, this is a nitty-gritty that you should remember. A lot of people actually land up making a mistake. So entertainment tax, if it is levied by state government, it is subsumed in GST. It is subsumed in GST, right? And which is why what will happen here? Okay, it is no more being levied, and instead of it, GST is being levied. But my dear friends, if local authority is levied in certain states, okay, it is the local authority who is levying entertainment tax in certain states. Like for example, in a lot of south states, local authority levies entertainment tax. Now understand, that is not subsumed in GST. Now understand, that is not subsumed in GST. And which is why, my dear friends, understand, in this situation, okay, is entertainment tax still being levied? Yes. Okay, it is still being levied. GST nahi aaya, GST is not being levied here. Okay, so remember that, my dear friends, very, 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 very clearly. Okay, that's it. So keep an eye on entertainment tax. Here generally people make a mistake. Taxes not subsumed in GST: basic custom duty, excise, VAT, GST, and alcoholic liquor, rule, right? For 5 petroleum products, we will do in subsection 1. Still I will mention them: petroleum, high-speed diesel, aviation turbine fuel. Then we have what? Natural gas, and that's it, right? Crude oil, my bad, right? Crude oil, petrol, high-speed diesel, natural gas, and ATF, right? These are the 5 petroleum products on which even today excise, VAT, and CSTs. So if you go to the petrol pump, he will charge you VAT, because he is not manufacturing the petrol, he is just selling it. So VAT, right? That's it. Stamp duty is on shares and properties. Property taxes, owner of the property pays it. Tax on motor vehicles is nothing but your road tax. And electricity duty, my dear friends, is one that you pay on electricity when the bill comes. Is that very clear, my dear friends? Is that very clear, my dear friends? Is everyone able to hear me out? Yes. Give me high five, say I can hear it. Give me high five and say that I understand. Do you understand, guys? Do you understand, guys? Yes. Okay. Now, apart from this, just understand that there are 2 major products that you need to remember: tobacco and opium, Indian hemp, and narcotics. Everything is what you like, what you consume, and clearly after having this only better, you have taken the decision of pursuing CA. Don't say lies, I know the truth. Yes. Okay, so my dear friends, tobacco, correct? Okay, you know Mukesh bhai? Mukesh, वो movie के पहले आता है ना, that Mukesh, yes. Okay, on that, understand central excise duty is levied and GST is levied. Central excise duty plus GST, and there is something else, GST compensations, as which also is being levied, but since it's not a part of your syllabus, chuck it. Second, opium, Indian hemp, narcotic drugs. Opium, Indian hemp, narcotic drugs. Opium is afim, Indian hemp is bhang, and narcotics is charas ganja. Are you getting it? Yes. If you produce that, state excise duty and GST will be levied. So generally excise duty is the power which falls under central government. So if you manufacture anything and everything, excise duty, pre-GST law की बात कर रहा हूँ, talking about pre-GST law. But if you manufacture alcoholic liquor or opium, Indian and narcotic drugs, simple. In that case, excise duty is also levied by state government because these are state subjects, which is when certain states alcohol is allowed and in some states the interstate is only a dry state. Classic example, Gujarat. Yes. Okay. Absolutely correct. Okay. Neha, are you getting it? Akila, are you getting it? Akila, can you hear it? Akila. Okay. Manish bhai, Neha, Rushikesh, Saurabh, Sorin. Is everyone able to hear me, guys? Are you all with me, guys? Okay. Lovely, 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 lovely. Okay. Yes. Yes. Now, understand one thing. We spoke about all of that. Now, the only thing that we need to cover is two things: Article 269A, Article 279A, Article 269A, and Article 279A. Understand one thing, guys. Article 269A only talks about two things: that IGST simple shall be levied and collected by central government. Why? Because IGST is an act passed by Parliament, and any act that is passed by Parliament, the tax will be levied and collected by central government. Okay, so which is why actually Parliament has passed 3 acts. Okay, Parliament has actually passed 3 acts. One is CGST Act, then is SGST. No beta, SGST is passed in the respective state laws, state legislature, state assembly. Okay, it is UTGST Act and IGST. Right? All the 3 have been passed, okay, in the Parliament. Right? So the power to levy and collect also goes to CG, because who sits in Parliament? Modi ji. Right? Yes. Okay. Next, import are deemed to be import किसी का भी हो सकता है, import of goods or service, anything, are deemed to be interstate supply. Is that very clear? Yes, it is this place where we get to know that. Okay, now what I feel is question can be asked on Article 279A GST Council, because it is important, it has a lot of substance, and it can be asked in the exam. Okay, already once it has been asked in the exam, right? But still there are always questions that can get repeated. Okay, yes. Okay, Akila, can you please help Brian understand how did you increase your volume? Because I am speaking in the same tone, Brian. I'm speaking in the same tone, Brian. Let me check. Does excise or a VAT certain states, like for example, in a lot of south states, local authority, right? Understand the understand that government did not have the budget. Is it audible now? Brian? I think I got the reason why you were saying that. I think I got the reason. Okay guys, okay, is it audible now? Is it audible? All good? I guess there is no background noise anymore, right? Okay, good to go, okay, that's it, okay. Now when it comes to, my dear friends, article 279A of the GST Council, okay, when it comes to article 279A of the GST Council, my dear friends, understand one thing very clearly. First you need to understand the composition. Union Finance Minister Nirmala Sitharaman ji, MOS Finance is Pankaj Chaudhary, and State Finance Minister. So every state will have a cabinet which will have finance as one of the portfolios. So ideally that person will represent in the GST Council, right? And above that is MOS Finance, Minister of State Finance, and above that is Union Finance, right? Okay. Acha, which are the matters to be discussed? Whether a certain taxes or cesses or surcharges should be subsumed or not in GST. Second, threshold limit of exemption. So what is the threshold limit? What is the personal exemption that needs to be given, right, to every taxpayer, right? Is it 10 lakhs? Is it 20 lakhs? Is it 40 lakhs? What is it, right? Third, goods and services to be exempted. So this is not a personal exemption. This is exempting particularly goods or services, right? Correct. So this is an exemption for goods, not for a particular taxpayer, right? So for example, let me just clear this concept because a lot of people don't understand this. So guys, for example, healthcare service. Understand that this is a service, okay, on which government would have easily collected tax. Why? Because it clearly satisfies the definition of supply. Yes, it clearly satisfies the definition of supply. What is the definition of supply? Goods or service for a consideration in the course of business. Goods or service for a consideration in the course of business. Now understand one thing, my dear friends. Understand one thing very clearly, that if I am hospital, am I giving you service? Yes. Am I collecting consideration? Yes. Is it in the course of my business? Yes. So is it a taxable event? Yes. Is it a supply? Yes. Will GST be levied? Yes. Government has all the power to collect GST from this hospital, but government has itself told that no, I don't want to levy GST on this. And which is why, though I have the power to levy GST, I will not exercise this power by notifying it. So I will, okay, furnish a notification stating that this service is exempted from GST. Got it? So government has the power here, but government chooses not to exercise the power by imposing an exemption notification. And the day this gets withdrawn, simple, all the other services will become taxable on which exemption was placed initially. Is that very clear, my dear friends? That's it. But there is another exemption called personal exemption. That is this 10 lakh, 20 lakh, 40 lakh, if you can remember. These are certain limits for certain things. Right now we will only focus on 20 lakhs. Now understand, if I am giving coaching service, right? If I am giving coaching service, so I might be teaching for the last 12 years, but I have started my own thing for the last 1 month only, right? Tax ka teacher, CA ka run sheet. So I have now made a company. Now this company will understand supply service. Now from day one only government cannot say chalo pay tax, because you are doing the crime of supplying service. Which service? Coaching service. No. Government will not burden me with GST compliances right from the day one. No! Government will not do this. Government will give me a breathing period and say, once you have done supply of 20 lakhs and you go beyond that, that is the time I think you are now capable to handle compliances, and then you will charge GST for all those supplies that you are making beyond 20 lakhs. Beyond 20 lakhs. Got it? So up to 20 lakhs it is exempt. So now question is coaching service exempt? No. Coaching service is a taxable service. Coaching service is a taxable service, but it is exempt for me because I have started a new business in this financial year. Are you understanding, guys? Are you understanding, Brian? Are you understanding, Akila, Neha, Rajvi, Manish? Are you able to gauge what I'm trying to say? Yes, 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 Rushikesh, yes, yes. So there are two types of exemption. Okay, one is person-based exemption and the other is very simple threshold. This is the person-based exemption, and this is goods or service-based exemption, where entire goods or services are only exempt. Okay, yes. So for example, tell me one thing. If I have a question to ask, tell me one thing. Tell me one thing. For example, there is a service, right? And this is the aggregate turnover. Tell me if the service is healthcare service, which is, by the way, exempt in nature. Right? The aggregate turnover of that is 10 lakhs and the applicable limit is 20 lakhs. What will happen? Taxable or exempt? Taxable or exempt, Navya? Tell me first. Navya? Exempt. Achha. What if the same healthcare service, but the turnover is 100 lakhs? What will happen here? Is it taxable or exempt? Is it taxable or exempt? Ki hobe? What will happen? Tell me, Vinay Reddy, Hit Kubadia, Kartika, Fattavatje, Kushi Agarwal. Yes, it will be exempt. Got it? But what if I tell you, let's say coaching service, right? Now the service is taxable, right? Two things, 10 lakhs, 100 lakhs. What will happen in this case? Kushal Agarwal, what will happen? Tell me. This will be exempt and this will be exempt up to 20 lakhs but taxable for the next 80 lakhs. Is that very clear, my dear friends? Are you able to understand? Yes, I hope this is very clear in your end. What is a person based exemption? What is activity based exemption? Thank you. Okay, then their agenda is to discuss rates of goods and services, then the principles of levy of GST, the model of GST, the apportionment of IGST. So the principle of levy is very simple. It is levied on the basis of supply of goods or service. GST model is dual GST model, and apportionment of taxes, that in case of IGST, understand, if I am the supplier, you are the recipient. If I am the supplier, you are the recipient. Okay, I have collected IGST from you. Yes. I will pay IGST to CG. Yes. Now CG will now, okay, bifurcate into two parts. One part will go to CG and the other part will go to SG. Because understand, we have to adhere to the principle of what? dual GST model. Which model? Dual GST model. Is that very clear, my dear friends? Is that very clear, my dear friends? Yes. Okay. So 50% will go to CG, 50% will go to SG. Now question is which SG? The answer is that SG where the consumption takes place or where the goods are destined. Okay. So quickly, for example, tell me one thing. Okay, supplier, recipient, and let's say place of supply is also the same as location of recipient. This is in Maharashtra, this is in Gujarat. Is this interstate supply? Yes. So let's say selling price is 1 lakh plus IGST कितना है 18%, 18,000. Recipient will give 1 lakh 18 to whom? Supplier will keep with himself 1 lakh. In 18 he will give it to CG. Now it is CG who will do what? Two things. Keep 50% with itself and keep 50% to SG. Question is which SG? Because understand the transaction is between two states. It is between Maharashtra and Gujarat. Got it? You will give it to whom? You will give it to that state where the goods are destined or the goods are consumed. And here the goods are consumed to be in Gujarat. Got it? And which is why it will be Gujarat. Achha, this bifurcation, this is a function of central government, not yours. So yours as a supplier, you only have one thing to do. In case you make interstate supply, you collect IGST and you directly deposit that with CG. Simple. Now whatever has to be done at the end of CG. It will keep within itself 50% and it will remit the other to state government. Which state government? That state government where the goods or service have got consumed. Yes, Navya, balance 80 lakhs, absolutely correct. Okay, that's it. Done, that's done. Okay, Achha, in GST Council, tell me one thing. Even if one member is present, can a resolution be passed? Let's say, for example, they want to say that this mic initially was 12%, now it's 18%. Can the resolution be passed even if there is one person present? No. The at least quorum is 50%. Only when 50% of the quorum is present will the resolution be passed. Voting. Minimum 75% to pass a resolution. Minimum 75% to pass a resolution. Are you getting it, my dear friends? Yes. Okay. So majority कितना चाहिए अपने को? 50? No. Majority is. So you just write here minimum नहीं majority. Majority 75%, but understand that when CG votes, one vote is counted as 1/3. That is 33%. And when SG votes, it is counted 66%, 2/3. Right? That's how it is. Right? Perfect. So that's all I wanted to say, that this is the respective weightage given to both CG and SG, and this is the maximum majority that you need to pass a resolution. Okay? So government is actually, CG is so smart. Let's say for example, if there are 31 states, understand, and if a resolution is passed, yes or no, correct? So even if all the states come on one side, okay, 31 divided by 31 multiplied by 2/3, this happens to be 66.67%, and here it's only CG, that is 33.33%, 1/3. Understand that the resolution will still not be passed because the minimum majority I require is 75, and here it happens to be 66. So if you want a resolution to be passed, you have to have CG by your side, otherwise you cannot pass the resolution. So prima facie it might look that government does not have any power because there is just 1/3 weightage and where it is 2/3 weightage, but no, they've increased the majority from 50 to 75 just to make sure that whatever resolution actually happens only when CG is with that, and if it is against that, end of discussion, nothing can happen. एक पत्ता भी क्या आप नहीं घुमा सकते, ठीक है? That's it, my dear friends. I hope you all have understood it. Did you all get it, my dear friends? I hope you all are getting a perspective of it and there is some value addition being done at your end, because here is where we finish off our introduction part with respect to the theory of GST. There is a certain part with respect to practicality that we need to understand with respect to GST, which will soon get over. But I am able to understand, I am able to gauge, is the speed fine? Please give me a thumbs up if yes, sir. Is it too fast? Is it too slow? Please tell me, please tell me. Okay, speak for yourself, guys. That's all you can do. Okay, now there is a very interesting thing that I am asking you all to go ahead with. Understand. So there is a very important question that can be asked from the introduction, that is, which generally students don't land up doing. Okay, deficiencies of previous tax laws. They don't. Okay, most of the times I have seen that they ignore this question. Let's see what it is. Okay, I'll quickly go through how GST works. Okay, I'll quickly take you through the entire VAT model that I hope you all have already understood, but I'll quickly take you through that because there is something very important that you need to understand with respect to IGST, which we can understand from this experiment. Okay, फटाफट. Okay, सबसे पहले, okay, sales tax. If you remember, my dear friends, sales tax is basically earlier version of VAT, right? So if there is sale of goods within the state, initially it was sales tax, then it was VAT, and now it is obviously intrastate supply, CGST, SGST, right? So how was sales tax being levied? फटाफट से क्या? Let's just go through it. Manufacturer, wholesaler, retailer, consumer. Okay, so the cost is very simple, my dear friends. Was 1000. Okay, I'm so sorry. Profit is at the rate 20%, 200. Selling price 1200. Sales tax 120. 1320 is cost to the wholesaler. Recipient cost is 1320. Obviously wholesaler will pay 1320 to manufacturer. Manufacturer will fill himself 1200, and 120, okay, will be surrendered to him. Government. Got it? Correct. A profit malayega 264. Selling price is 1784. This is so sorry. Yeah, 178. Cost to retailer is I guess just a second. Am I right? Am I going in the right direction? Oh, sorry. Oh, I'm so sorry. It's 1584. This is 158. And this is simple. (1742). Retailer 1742 to wholesaler. Wholesaler will keep with himself how much? 1584 and 158. We'll go to the amount. जो retailer है उसका cost now it will be 1742 plus profit 348, 20%, selling price 1900 plus sales tax 190, cost to consumer 2090. This is what he will end up paying, right? I'm so sorry, this is 2090, this is 209, and this happens to be 2299. Am I correct? Perfect. Okay. So here the retailer will keep with himself how much? 2090, and 209 is where it will go to government. Okay, that's it. So here the entire fuss was about what? That if you check this, you will see that one part of that is very simple, is 120 rupees. And that is cascading, right? 120 is में, and then 1584 will also have 120, and it is on the sales tax part. Again, when it is levied on that 1584, it is levied on 120, and that is what is cascading. Okay, and the same happens here. 1742, if you will see it, there will be 158 and there will be 120. So again there is cascading, tax on tax, because very simple, my dear friends, there is no intervention of government. Absolutely not. Whatever I am paying from my pocket, I am using it as my cost, adding profit, and I am taking it ahead. That's how it works, right? And the amount that finally goes to government's pocket is 487. Now this was making the goods very expensive. Understand that the same goods that I am purchasing from a domestic retailer at 2300, almost 2299 is 2300, right? The same if I go and import it, after paying all the taxes also, that is costing me to 2000. So because of this cascading, what happened is that domestic goods became way more expensive. People started again importing. The government realized that there is a need of change that needs to be taken into consideration, and which is why we introduced value added tax. Okay, which is why we came up with value added tax, VAT, right? Manufacturer, wholesaler, retailer, consumer. Cost 1000, profit 20%, 200, selling prices 1200. Okay, sorry, VAT comes out to be 120, 1320, and that is nothing but price to wholesaler. Price to wholesaler. So the wholesaler will actually end up paying 1320 to manufacturer, and manufacturer will actually land up paying only 120 to government. Now you will end up telling me, sir, initially also manufacturer paid 120 and now also he is paying 120, so what is the difference? There is no difference, and there can never be one. The difference will only start when the cascading started in the earlier taxation regime. And in the earlier taxation regime, cascading starts from here, at this point. So change will also be seen from here. So the wholesaler, when I'm talking about the wholesaler here, though he has paid 1320 from his pocket, but will he still keep as the cost as 1320? No. Will he still keep the cost as 1320? No. He will keep it only 1200, because government has asked him to do that. And why did government ask him to ignore those VAT part and just include the selling price part? Why? Because obviously if you again land up writing 1320, the base amount has tax, the cost amount has tax, it will tomorrow be added with profit, and then it will be selling price, and then again cascading starts. Cascading starts. Are you getting it, my dear friends? Yes. And which is why it was pertinent to note that the cost is taken only at 1200. Now wholesaler is convinced about the fact that by writing 1200 there will not be cascading, but he is not convinced about the part that, listen, I have paid at the end of the day 1320. Why should I write the cost as 1200? Where the hell will I recover that 120 from? Government said, you don't worry, I will give you when the time arrives. So keeping trust on government, wholesaler said, okay, let's go ahead with this. Profit makes it to 240, selling price 1440, VAT comes out to be 144, price to retailer comes out to be 1584, retailer to wholesaler 1584, cost कितना लिखेगा भैया retailer? कितना लिखेगा? Tell me. Yes, 1440. Because again, if he also lands up writing 1584, cascading begins. Because in that 1584 there is 144, and that 144 is VAT. Again, if you have VAT in the cost, tomorrow it will be visible in the selling price, and on that selling price you will again levy VAT, and that will again lead to cascading, and we don't want that exactly, which is why government insisted write 1440. Profit 288, selling price 1728 plus VAT 172, price to consumer 1900. Got it? Now understand. There is one part that is still pending, and that is this. Question is, how much is the wholesaler going to deposit to the government? Very simple. So wholesaler knew one hack, that listen, whatever I am supposed to collect, I am supposed to deposit. Whatever I will collect, I will deposit. Collect. So if he has collected 144, he thought that he needs to also deposit 144. But that ain't happening, because government also has given some promises to the wholesaler that in spite of incurring 1320, you will write 1200, 1320, you will write 1200. Now that 120 that you are writing lesser here, you are going to get it from the government. And how? This is how you are going to get it. So instead of depositing 144, from 144 you are going to keep with yourself 120, and remaining 24 is what you will hand over to government. So do you realize this 144 is going from the pocket of retailer and it is coming in the pocket of wholesaler, and from that 144 wholesaler is supposed to keep with himself 120 and remaining government को दे देना 24. The same will happen with retailer. He has collected how much? 172. He was supposed to deposit 172, but no. Government said out of this 172, you are going to keep with yourself 144, which you have paid, right? Which you have paid, and you are going to deposit only 28 with me. Are you getting it, my dear friends? Okay. And here the amount that which we are asking him to keep with himself is nothing else but input tax credit, and this is nothing else but output tax liability. Did you get it, guys? So output tax minus ITC, very simple. Okay, finally lands up as your net tax payable. In cash. Your net tax payable in cash. Are you getting it, my dear friends? Are you getting it? Correct. Okay. And which is why, if you can see, the amount collected here is 172, which initially was 487. Got it? So there is a reduction in the amount deposited. Why? Because of a very simple reason, my dear friend. Because of a very simple reason. Because there is no cascading. So who's paying the price of it? Government. Initially they were getting 487, now they are getting only 172, and rightly so, because from 0 to this there is a value addition of 1720, where manufacturer added 1200, wholesaler 240, retailer 288, and which is why manufacturer will end up paying 120, 24, 28. The value addition that you do is the VAT you pay. Simple. The value addition that you do is the VAT you will land up paying. Simple. As simple as that. Okay. Now, I'm sure you are very well versed with this entire concept of ITC and credit and all of that, right? Now understand, this was the beauty of VAT. Now where did VAT also, had a problem, which gave rise to GST, right? So there was a problem in VAT, service tax, CST, and which is why we needed something called as GST. Now these are the problems that we are going to address here, right? That which were the problems that were still prevalent in VAT, service tax, CST, which were actually functioning on the principle of value addition, value added tax, which is why the VAT used to actually be called as MVAT, and excise and service tax were a part of CENVAT, central value added tax, because those were the taxes collected by central government. Got it? Yes. So I am focusing on that. Okay, just understand it. So what were the deficiencies? Let's understand. So as a trader, I will be registered with whom? With the state government. Let's say Maharashtra state government. Okay, so if I purchase goods, within the state, and if I sell goods within the state. Understand, if I purchase it for, let's say, 1 lakh, VAT is 10,000. Okay, here obviously I will get the credit of VAT. Why? Because this will go to Maharashtra state government. So my cost will be 1 lakh, profit let's say 50,000, selling price let's say 1,50,000. Your selling price will be 1,50,000 plus VAT will be 15,000. Got it? Now understand one thing. Output tax here will be 15,000 minus ITC will be 10,000. 5,000 is the amount payable in cash back. Got it? Why is the amount 5,000? Because the value addition is 50,000. You have purchased for 1 lakh, you are selling it for 1,50,000. 50 is your value addition, उस पे जो 10% है वो है my difference VAT. Got it? Yes. Okay. Now understand one thing very clearly. That when both input and output tax is going to the same government, when both input and output is going to the same government, you will get the ITC. Also, if you want, there's another way to understand that wherever you are registered, if your input tax goes to that government, you will get the ITC. If that helps you, right? So always focus on where you are registered and where is the input tax going. Is it going from your pocket to your own government? You will get the ITC. If not, then you will never get the ITC. Okay, let's apply it. Okay, so for example, understand, if I am a trader registered with Maharashtra state government, now I all of a sudden purchase goods from a manufacturer, right, which levies excise duty. It will go to central government. Acha, I will sell it where? Within the state. So I will charge what? VAT. Why? Because VAT is charged when the sale is within the state. Excise is charged when there is manufacture of goods in India, right? So if I am a manufacturer, you are a trader, I will levy selling price plus excise duty. And you are a trader, okay, you are purchasing goods and selling it. The only value addition that you do is profit. Then you will levy VAT because you are selling within the same state. Got it? Yes. Now understand, is my input and output tax going to the same government? Come on guys. Is my input and output tax going to the same government? No, it is not. It is not going to the same government. Understand that thing very clearly. Okay? And which is why, my dear friends, you will not get the ITC here. Because you are registered, because simple here, understand that your input tax is in the form of excise duty. When you say that I want credit to Maharashtra state government will say that, but you have paid that amount to CG and you are asking for a benefit from SG. How is that possible? I don't even have that amount. How can I give you credit on the same? Not possible. And when I went to CG to ask credit, CG said that, but you are registered with SG. How can I give you credit? So that's how it went. Achha, the same happened by the way with service tax. Why? Because service tax is also a central tax, right? So again, I did not get the ITC. Again, If I don't get the ITC, it becomes a part of my cost. If I don't get ITC, it becomes a part of my cost. Got it, my dear friends? Yes. And it became a part of my cost, and obviously understand my cost now is, let's say for example, 1,10,000. Now that 10,000 either represents excise or service tax, and on that tomorrow VAT will be levied. So this was the deficiency. Also understand one thing, there were various taxes which were state taxes like lottery, luxury, entertainment tax, correct? Now understand, if I have landed up paying entertainment tax and let's say I charge VAT, again, though this is going to the state government did not allow the ITC of the same. Okay, if your output tax is VAT, the only ITC you could have availed was of input VAT. Simple. So this was not a part of the VAT system. They had not been integrated into the VAT, even though they were state taxes. Right? That was also increasing the cost of the supplier. Got it? Right? So in spite of the fact that port taxes were state taxes, understand, luxury, lottery, entertainment was never integrated with VAT, and hence no ITC. And whenever there is no ITC, it will add to the cost, it will add to the cost, it will add to the cost. Okay, same happened with service provider. Check if there is a service provider. Now service provider, if he lands up paying service tax and also charges service tax, both will go to whom? CG, and he is also obviously registered with CG because he needs to pay that tax which belongs to CG. Simple, he will get the ITC. But as soon as this service provider purchases goods from a trader who will levy VAT, understand, you are registered with CG, but this VAT has gone to state government. You will not get the ITC. You will not get the ITC. Absolutely not. Absolutely not. Right? Because your output tax is in the form of service tax, and service tax goes to central government. Right? So you should have an input tax which will also go to central government. Okay? If you don't have that, simple, you will not get the ITC. Gotcha? Guys, keep replying, guys. I will understanding Rushikesh, Navya, Rajvi, I will getting it, Akhila. Come on, Neha, tell me. Right. Now comes the last part. The manufacturer. Understand that you manufacture, you are subject to excise duty. When you sell within the state, you are subject to VAT. And if you provide service, you levy service tax. Remember these taxable events very clearly. Okay, now tell me, as a manufacturer, I will trigger how many taxable events? 1, 2 or 3. As a manufacturer, I will trigger how many taxable events? 1, 2 या 3. I will trigger 2 taxable events. First is that I will manufacture goods and then I will sell goods. Okay. So first is the taxable event of manufacturing. Second is the taxable event of selling. So I will be registered with both central government and state government, because I will end up paying both excise and VAT. So understand what will happen. Let's say, for example, if I am purchasing goods from a manufacturer, let's say the purchase price is 1 lakh. He will levy excise and VAT both. Let's say it's 10,000. Let's say this is 30,000. Hypothetical, 30k. Let's say this is 10k. He also takes services. So service taxes, let's say again 10k. And he will end up charging a selling price of, let's say some absurd amount, let's say 10 lakhs. Excise duty that he charges, and there is VAT that he charges. So what? How can you say that he will? What? I did not understand. Rajvi, your first taxable event is that he manufactures, so excise, and when he sells ahead, he does the crime of what? Trading of goods. So he is a manufacturer and a trader. He is a manufacturer under excise law and he is a trader under VAT law. So if I am that person, I am a manufacturer and a trader, but under different laws. Got it? So CG will also come to me and SG will also come to me. And since they will come to me, I will have to shift the burden of both them to my wholesaler or retailer, whoever I am serving for. So let's say my excise duty, let's say 50k, and VAT is, let's say, for example, 20k. So here, do you realize this? I have output tax which will go to CG worth 50,000, and I have input tax of 30 and 10. This will also go to CG, this will also go to CG. So 50 minus 30 minus 10, simple, 10k. Okay, so understand CG को कितना जाएगा output tax minus ITC 40k, 10k, and to SG what will happen, tell me? My output tax is 20k, my ITC is 10k. Got it? Alright guys, got it? Got it? Got it? Got it? So I actually will end up getting ITC of 30, 10, 10. Everything. Excise, VAT, service tax, everything. There will be not an ounce of cascading. My cost will be 1 lakh here, 1 lakh here, 2 lakhs. So in spite of the fact that my input tax has service tax, excise, VAT, I will not an ounce of that added to my cost. You know why? You know why? Because I am registered with both the governments. Yes, I am registered with both the governments, and that is the beauty of GST. That looking at the manufacturer's model, we realized that if you are registered with both CG and SG, your input tax can either go to CG or either it can go to SG. The government said when you are registered with both, you will get ITC of both. So government said when we levy GST, we have to make sure that the manufacturer, trader, service provider, all of the three are registered both with CG and SG. CG and SG, CG and SG, CG and SG. Is that very clear, my dear friends? Okay. So this is actually the reason why we wanted to go ahead, okay, with dual GST model. Why we wanted to go ahead with dual GST model, because we wanted everyone to get the entire ITC. So today, for example, understand the trader, if he purchases something from a service provider, let's say he takes CA service, what will a service provider charge? CGST and SGST. And what will a trader charge ahead? He will also charge CGST and SGST. Are you getting it, my dear friends? Are you getting it, my dear friends? Yes, sir. You are getting it. Okay. Okay. When I am trying to cover as many things as possible, so whatever you want to consider. Okay. And that's it. And which is why you will get the ITC of entire thing. Okay. So keep this thing in mind very, very, very well. Okay. So this is the actual reason why the concept of dual GST model finally arrived. Okay. That's it. That's it. And which is why GST came into picture. And also the reason, my dear friends, also the reason, let me also help you out with, why was GST also considered as, why was IGST rather also considered as destination based tax? Was because of a very simple reason, that CST, the power to levy here was with CG, and power to collect here was with SG. Right. So here what happened was, supplier है, recipient है. Supplier is in Maharashtra, recipient is in Gujarat. Selling price 1 lakh plus CST 10,000. 1,10,000. Recipient gives 1,10,000 to supplier. Supplier will keep with himself 1,10,000. Since the power to collect is with whom? State government. But the question is, which state government? Maharashtra or Gujarat? Maharashtra or Gujarat? Government said Maharashtra. So basically, the CST was an origin based tax. And now that was a pain in the ass for the recipient. Why? Because he is in Gujarat. Understand his pain, understand his agony. I'm talking about the recipient. He has landed up paying CST as input tax. And this is actually going to whom? Maharashtra. Whereas he is registered with whom? Gujarat. So tomorrow when he is going to sell it, he is going to sell it within the state, and he is going to charge VAT on that as the output tax. So he will owe this money to Gujarat state government. Now, has the input tax gone to Gujarat state government? No, it has gone to Maharashtra state government, and which is why he never got the ITC of CST. So CST was also not integrated in the system of VAT, and for obvious reasons, because that money never went to the state government where the recipient was located. So recipient was located in Gujarat and the money was going to Maharashtra. No ITC. Yes, ITC would have easily been received if that money would have gone to Gujarat. So what government did was that in GST, what government did was that when there is a recipient, okay, he's in Maharashtra, here he is in Gujarat. So here they said, okay, listen, charge IGST, let's say 10,000, 1,10,10,000 दे दिया. Now this IGST will go to whom? CG. Okay, will go to whom? CG, central government. Understand? And then the CG will remit this to whom? To that state government where the recipient receives the good, consumes the good, or where the goods are destined. So 50% he will give it to Gujarat and 50% will go to center. So do you realize that recipient is from Gujarat? And understand, IGST ka tax part also goes to Gujarat. And the reason why it was Gujarat is because it was necessary for the recipient to take ITC. It is necessary for the recipient to take ITC. Are you getting it, my dear friends? Are you getting it, my dear friends? Yes, sir. Which is why it was very important to shift from origin based tax to destination based tax. So that, okay, the recipient who actually lands up paying the input tax finally comes to the government where recipient is registered. Got it? So recipient pays it to the supplier, supplier pays it to the CG, and CG splits it between itself and to that state government where the destination of goods or services arrive. And that's it. That's it, my dear friends. That is what I wanted to explain when I said introduction. Got it, my dear friends? Yes. So there are 3 Q&As that you will be doing. Deficiencies of previous tax laws, seamless flow, we will do it tomorrow, constitutional amendment and article 279A. Got it? Okay, and I'll be sending you that tomorrow itself. Okay? Every chapter we do, you do Q&A of that. Chapter Q&A, chapter Q&A, chapter Q&A, and since this was the first day, I wanted to gauge some space and understand the speed and how you get things. Got it? So which is why we will just stop today at this, tomorrow we will wrap up charging section in RCM. So there will be a lot of times when in a day you will be completing a couple of chapters. Got it? I would just ask you to do certain things. That's it. अब वो कर देना. So go to the module, okay, and wrap up all the questions there. Especially deficiencies, especially the ones that I have told you, right? And once you are done with that, done. Your introduction part is done, right? Tomorrow we will do charging section, which will also include RCM, right? And the amendments in RCM. So all the amendments will also be done during the lecture only. So you don't have to refer them separately. Got it? I just need your feedback. How was it? How was the pace? Did you understand? Did you like it? Was the pace good enough? Smith, Kushi, Avni, all good? Avni, you were attending for the first time. Did you understand? Kushal? Avni? Don't this reason why the South Indian states being the largest manufacturer of the destination-based tax model? Yes, a lot of states, in fact South Indian states, there's MP, Maharashtra, Gujarat, Punjab, all of these states are all manufacturing hubs, and they will lose a lot of money because they have earned enough when the tax was origin-based tax. So now government wants to give finally the taxes to those states where there is destination. Also the fact that it benefits to the recipient big time, because he is now able to take ITC, because the only way recipient can take ITC is when the tax is deposited in the state where he is registered. Simple. And which is why I don't know if you have gone to any outstation audits or not, but let's say you are a registered person under Maharashtra tax law, right? You are a GST registered person and you are a GST registered person, okay, in the Maharashtra state, right? Understand, then in that case, if you let's say go to Delhi and you stay in a hotel there, now that hotel will actually land up charging you CGST and Delhi SGST, because the place of supply of hotel is that place where the immobiliary property is situated. तो वो तो लगा देगा CGST and Delhi SGST, and you will end up paying that. But understand, you will not get the ITC, because when he will file GST urban, he will deposit the amount in CGST and Delhi SGST, and that amount will not be reflected in your GST R2B, because understand, you don't share the same states. आपके 2B में दिखेगा ही नहीं. Your in 2B it will not be visible only. Understand? Got it? You will not get the ITC because you are registered in Maharashtra and the money has been deposited in Delhi. Okay? So I don't know if you got this or not. You might get it with time. But yeah, I hope you all got the clarity, the expectation with which you had come, right? Did you all have good time? Navya, Rushikesh, Rajvi, Vinay, Sureen, Neha, please answer, guys. Guys, if you like it, then please take out your precious time and just comment kar do yaar. Okay, just comment on this lecture. This will be uploaded soon in half an hour or so, या फिर कल क्या है वापस लेक्चर आने से पहले इसको कमेंट कर देना. I'll be more than happy to receive it. ठीक है? That's it. Tomorrow's session might be a little longer because it requires a lot of attention, but that's fine. I think Even I did not realize when did we end up spending 2 hours. Okay, hope the session was good enough. Let's meet tomorrow, guys, without wasting any time, and go through these questions that I have marked, and I think you are done with introduction and never seeing it again. Okay, that's it, guys. That's it. Okay, all the very best.